Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, which makes it just gone 1100 UTC. A big shout out to everybody watching this live today, as well as everybody that watches this on recording. So, hope you all had a fantastic weekend. Back to the charts today. Going to take a deep look into Bitcoin and also want to cover some of the important key news events that we've got coming out this week relating to traditional markets, which, you know, those updates, as they normally do, but especially recently, have been very helpful in terms of working out the risk appetite of the market. Victor, Erica, Gio, hello, everyone. So, in the weekly build up to Token 2049 out in Singapore, we want to see if we're going to get any kind of market recovery here. And while this looks a little bit messy at the moment, I'm just going to kind of hide all this away in a minute. But I wanted to kind of leave it on here for us to look at later. So let me just see if we can get this here. 1 second. I'm going to open these back up in a little while. We will see if we've got some time towards the end to make time to take a look at some alts as well. And as always, if you've got any questions, please don't hesitate to ask. Just be respectful of others in the chat room. And yeah, let's get on with it. So I think first things first, let's just zoom right out. Hey, hello, Craigie boy. So where are we at the moment? Well, the line that's up here is the previous all-time high set back here in November 2021. For me, this still represents a very key level. We can see what happens when we got here before. Deviation, no establishment above, sell-off. Deviation again, larger sell-off. And then this one was just a straight up rejection at this level. Hey, oh, Gregory. Hello, mate. Good to see you too. So in terms of levels and what we're looking at, and we're just going to run through, we're going to look weekly, daily, 4 hour. Anybody's looking for anything more intraday, then please let me know and we'll dive down onto the lower time frames as well. But really at the moment, this is very much about high time frame context for me, right? So what do I mean by that? Well, quite simply, I know, look, the majority of people in this space want to see crypto do well, and I can understand why. However, I think sometimes it just kind of overshadows or gets into people's mindset, and that kind of foggies the overall decision making from a technical standpoint. I can understand how fundamental, on-chain, all these bits and pieces, of which I am a long way from an expert, surround myself with very good people in those areas because it's areas that I'm not very proficient at. Okay, I'm a technical trader. But from a technical standpoint, the first thing that I just want to show here is this. Okay, so now let's just move this to one side so it's clearer. So look what we have here, all right? We're looking at very simple market structure. The first key indication that things were sliding was here when we had a shift, okay? So that would be our market structure shift. For anybody that doesn't know the difference between a market structure shift and break, and certainly this is how I interpret anyway. And, you know, well, I say that because there's always caveats in trading, right? But I'm pretty sure anybody you speak to would give you the same point of view on this, which is, look, we've got a higher high followed by a higher low, yeah? Then this is where we set the lower high going into a lower low, all right? Now, whether you're saying that that's your break of structure because you come off of a low to a lower low, that's absolutely fine, but it is at minimum a shift in structure. So from here, everybody should have been getting cautious, okay? Now, what we would have wanted to see was this high then overtaken, all right, which is this one, to reclaim market structure. And then we can see this as a liquidity grab. I mean, especially from this wick down here, beautiful liquidity pool. And we did get an initial good reaction. And actually, for me, and certainly the way that I look at the markets, I'm looking for these gap inversions to give me an early indication here before we have a full structure recovery, right? So this was a bearish gap, repriced. Then when we get this close above it, we get the inversion, price comes into here, and then the assumption is that we're looking for this to act as support then. What was key resistance becomes support, Very, very simple. Whether you've got support and resistance levels or you're using gaps, you want to see these things reverse. If it's resistance here, you want to see it turn to support. And this was very misleading, right? Because we had this beautiful, pretty bullish week here, right? We came into this, price got bought up nicely. Key targets resting above us here, so it looked good, but then ultimately rejection at the 2021 high, which again, and I think I covered this in the last few streams, and I certainly cover it a lot on my kind of Twitter posts and reports, 69,000, right? 69,000 flat. It's just very interesting about these round numbers. And now as we look to the low here, which is our downside liquidity target at the moment, that is sat at 49,000 flat. I think it's a little bit to do with human psychology. I think we kind of rally to round numbers, but I'm certainly not here to to help you with your psychology. There's many better people placed than me for that, including our very own NLP coach. So simply, if we're looking at this from the standpoint, we've got our market structure shift or break, however you see the markets here. Ultimately, what we are looking at is bearish price action, right? So in those situations, you want to sell the rips, yeah? So like when you're bullish, you buy the dips. When you're bearish, you sell the rips. So you wait for these corrective moves, and then you're looking for these key areas to short. So on a weekly scale, what would we need to see? What would I want to see on a weekly scale? Well, to have real kind of conviction, then I'd want to see this, right? So I'd want to see price recover here and close above this order block, right? It's not an order block yet until we close above it, right? Again, looking at that kind of state of violation. This is where the buyers are, okay? Then you want to see them offside, all right? Now, obviously, we would really need to be cautious until we do get a structural recovery, but that might be some time on the weekly scale. So for someone like myself, especially focused on intraday trading, this is a much kind of broader picture, but let's just look at it as it is and say to ourselves, right, okay, very simply, market structure is bearish. That means that, we want to treat the trend as our friend. And someone told me this once, I'm sure it's been recirculated a lot of times, but the trend is your friend until the end, right? So until it gives you reason to be bullish here, then you just favor being bearish. Okay, that's the best one. Hey, Joe, how you doing as well? And Duncan, great to have you here, mate. Day or three. Yeah, okay. Interesting question here. So again, I think it very much kind of depends on what your trading style is. I always try and base everything around a triple screen system. So I'm kind of looking at this in terms of how I typically trade is normally using 4 hours as my high time frame, a 15-minute as my framing time frame. So for example, if I have a 4-hour bearish bias, bearing in mind this is as an intraday trader looking to get in and out of my trades in the same day, then I want to take that 4-hour bias that says, okay, what's the situation? Are we bullish? Are we bearish? If we're bullish, then I'm looking for key points that we need to react or hold. For example, henceforth, the feeling short on Bitcoin today still. And I'll show you why in a moment, because of the overhead resistance that we have. And then I'm using a 15-minute to shape that plan in with a kind of more detail. Okay, really kind of dive more into the minutiae of it, finding key highs, key liquidity pools within that we could react at, and then ultimately using that to set targets and executing on a very low time frame, somewhere between a 1 and a 5 minute. However, obviously, if you're a swing trader, you need to really kind of push that and extend that horizon. But what I still always do is account for the weekly and the daily, okay? Because ultimately, the major players in this market and every financial market are positional players that are, on much longer time horizons than most people are trading in the retail world. And that's why it's so key to have this kind of high time frame context. Why you see a lot of people like, someone who's exceptional at the kind of macro side of things is like Trader Exo, doesn't get anywhere near enough credit for what a great kind of macro economical brain he has on him, and just the way that he kind of looks at that data and feeds that in. Look, you're never going to be right all the time, but as long as you kind of get the right side of the main bias, then that really helps. But as Craig says here, I think the weekly is a great way to kind of look at it. I think the weekly and the daily are where the major positional players are aligning themselves. So we ultimately want to be aligned with them, and we want to kind of, ride the crest of that wave that, they're creating with the, extreme size and buying power that they can generate. or generate and inject into the markets, right? So before I digress too much, we can see that's the order block. So fine, I want to see us above here, and again above this high here as well, right? Because lower low, lower high, lower low, lower high. This could be a higher low, and then we move to a higher high, and then we've got that break, and then we're starting to look for recovery. Until then, I'm going to be definitely finessing this on the lower time frames, purely because, you know, at the moment there's a few other ways to kind of look at this as well, right? You know, this could be a really, really nice. Let's just do this in a different color. You know, if we look at what we've got here and we say, okay, what is this looking like at the moment? It looks like a pretty decent channel. Okay. I mean, rather than doing that as well, just for any of you that maybe don't know, hey Nick, how you doing, mate? You can also use this as well, right? Just use your channel tool, which is this one down here, the 2 lines. You'll find that on your bar on the left here, up on this first one, and then if you press the star next to it, it gives you the option to add it to your favorites, which is down below, and then you get it pop up on this little bar. Now, the idea of this obviously is there's a lot of different ways that you can draw support and resistance lines. I'll run you through the ranges that I'm looking at as well. For me, what I'm looking for when I draw, especially with a channel, also, you know, could be considered a very nice bull flag here as well. And let me just hide this for a minute. I don't like too many things on the chart. Is I always try and see that we can get kind of a good linkage between some initial touch points. And what do I mean by that? Well, I want to anchor to a wick, and then I want to apply a certain rule here. And the rule is either you then respect the other wicks, yeah? So the first two, obviously you can't respect them all kind of going on forever. Or you don't let it violate the immediate bodies, okay? So what I mean by that is, if I just hide this for a second, if I was drawing this freehand here, I can look to kind of anchor it to this as well and then project it forward. Or if I was using the rule of the bodies, then I wouldn't want to just do that, because where's that really going? Yeah. I think you could, if you had all this data, kind of say, okay, maybe something like that. If you were doing it in that way before, obviously you had this information, you could say, okay, you've got an anchor point here. You've seen you've run that, but I wouldn't want any of the bodies to be violated. All right, and we can see in this particular instance, deviation, price gets back underneath. Again, completely up to you. What I would say with these, and what I've seen from the very best traders that use these, you know, studying under SZ, Trader Dante, people like that, is don't be afraid to adjust those lines. Don't just kind of go, oh, okay, that's my channel, and, you know, I'm going to stick with it even though it looks wrong. You want to find the key areas, right? And for me, this fits so beautifully, because what do we have here, right? We've set it here and here, then you get a deviation, price comes back inside, midline, closes above the midline, range higher. What do we get at the range high? Deviation, price closes back in, midline, underneath midline, retest, sell off, deviation, back in, etc., etc. We've got all these beautiful touch points here. So from a kind of higher time frame perspective, as I said in the report, I'm not really sure this is the place to get short here. Okay. Now, it doesn't mean that we don't get intraday and daily opportunities and stuff like that, right? But I think overall, I think we want to be looking for some kind of pullback here. Now, I think, and we will cover this shortly as well, we need to factor in the kind of the macro picture here. And also, we really need to kind of look at the economic data. We need to look at the high impact news events that are happening at the moment. We've got the US PPI and CPI prints this week. We saw what happened last week, the catalyst created by a non-farm employment change coming about 30% under what they predicted, showing weakness in the economy. And then we had some kind of slightly stronger unemployment figures that kind of balance things out a little bit. But there's definitely, you know, a little bit of a flux at the moment we need to consider, and also seasonality as well, right? You know, historically, September is the worst month. You know, if you're a bull, right? It's ultimately the month that we see the most downside, and that's kind of reflected as well across traditional markets. So we're going to take a look at that news as well towards the end. But for the moment, on a weekly scale, I really like this channel. So I'm going to drop to the daily now. Hey, Pitt, how you doing, brother? Winning, absolutely winning. Brilliant. So, This really, really, really looks clean when you start dropping this down to kind of the daily and below. Look how this midline as well, deviation back above, range highs, gets underneath, deviation sells off to the lows, rejected at the midline, shows strength, holding this gap, holding structure, expands up, holds above to point of the almost perfect retest. Then when you really kind of zoom in, you're just looking for these. I don't even mind this one this much. You get that strong close above. This looks like a really nice retest here, and then we're away. A way that you can kind of, and sometimes, when you get these moves, you'll find that you kind of miss it. But when you're looking at liquidity pools, it's having the conviction to say, okay, if we're not breaking down here, then where can we realistically go? Highs and lows, if your key liquidities, obviously gaps as well. But ultimately, I'm looking at this in terms of ranges as well. Here's support, here's resistance, right? Until proven otherwise. And the midline, the EQ always plays a role. So what do? We get back inside, we have the conviction to play it to hit. But what if you want more conviction, right? What if you're saying to yourself, well, what about this? Ultimately close above, it looked like a perfect retest and price broke down. Well, one or two things. You either lose a trade here, as trade with you're earning money to lose trades. You just got to win more than you lose. Or certainly if you're not winning more than you lose, get a higher reward to risk, right? So someone like Crypto Bird, right, is an excellent example of this. Super calm guy, very, very well educated in this space as well as others, has this great conviction whereby he knows he's going to lose for sometimes 65+% of his trades, but he knows that the ones that he wins, his reward or return on his risk is that much higher that it completely obliterates the losses. All right. But again, you want to kind of fit that to your personality type. I'm a little bit more of your kind of, I'm not as calm and refined as Adrian, and I certainly don't think as well educated, but I'm a little bit kind of ADHD. I kind of don't really like holding things for too long. Big swings, big highs, big lows. So you got to play that in. Well, I certainly think you do anyway, into your trading, and I think it will really help a lot. For example, I was a successful swing trader, but I really kind of came into my own when I moved to intraday trading, being able to get in and out of positions, found it a lot better for my mental health. Felt a lot more comfortable in the fact that if I was wrong quickly. If I was right quickly. Anyway, if you do want to kind of find a bit more confirmation with these things, then any support and resistance level, when you break it, look for how price breaks the level. Like this, for example, big expansion candle here, which I really like, come off a great reaction from the lows here. So what would we look for? Well, you're either willing to kind of play the retest here when it comes in, yeah? Or if not, wait for the breakout like we get here, wait for the level, and then wait for price to establish above it. Okay, there's no reason that price should be setting a high like this if it's then going to sell off. It should be showing strength, and these are the kind of areas that we want to use to ascertain that. Also, if you do get in a loss here and price gets back underneath like it did here, then you can be pretty certain that you can flip position then, because you've got key liquidity targets down here. And then what I'm doing is I'm just simply overlaying the fact that we've got key lows here. Yeah, again, you see that reaction here, or here, for example, where we've got this bullish gap. You can look here for longs. Why? We've had a rejection at the midline. Yeah, so we're fine with that. I'm not really looking to enter or exit positions per se at the midline. I like to get in at the extremities, right? So range high, range low, and then ultimately making that decision when we step into it. So let's kind of roll this forward a little bit and say, okay, well, what does this mean for where we are now if we're looking at it, just purely from this perspective of support, resistance, the channel? We've got our weekly targets down here. I think right now, something that we can see quite clearly here is what is or are the deviations, right? So just focusing on the lows, deviation, deviation, deviation. Now, this is the big question, right? Is this the deviation? Or, is price actually kind of going to break further down from here? So how do we play that? Well, quite simply, price is kind of back in the range here now. So something I'll be looking at is how price reacts to this gap. Because if we get a rejection at this gap, I'll just do it in red to really signify that it's a bearish gap. And then we come back outside the range, as my good friend Trader Dank says in his story about Johnny and the pizza, which I highly recommend you to check him out and press him for that story. I'm not going to try and retell it because I just wouldn't do it justice, but it will have you in absolute tears and will stick with you forever, the rules of range trading, right? But the basic premise is If this is a deviation and was a manipulation move and price is now back in the range, yeah, then it should be showing strength, right? However, if this isn't a deviation move and prices come up to and then it comes back outside the range again, the chances are the strength isn't there and it's searching for liquidity lower down. So for me, quite simply, I can't really turn bullish right now with my system. I want to see a daily close above this, and then I think we come up and start targeting the midline. What I like about this here is there's no real inefficiencies on the daily scale down here. We've got this beautiful high within a gap, so like a gap high in here, meaning that we've got a bearish gap with a long wick, or any wick within it makes a really, really good liquidity pool. If we extend that over to here, excuse me, we can see where we get the intersection. Yeah, we're getting some nice confluence here where this lines up along the midline. Okay, so that's what I'd be looking for. If not, and we simply don't overcome this and we break down from here, then my bias remains bearish. Look at what we did, and we were talking about on the weekly. We're looking at market structure. Well, this is bearish market structure as well. So within here gives us our opportunities to look to take some short positions. In fact, Pitt, who is with us in the chat today, and we'll definitely find your Twitter as well, Pitt, or if someone can pop it in the chat for me, Erica or Pitt, if you're able to share it. Just a little cheeky intraday short position at the moment, right? Based on that information and based on other factors like finding those key liquidity pools, which I'll go into in a moment. But quite simply, hold this in a bearish fashion, come back outside the range, then I think we move down to the 49K. Close above this, and I think we get that squeeze higher. All right, there's an argument, you had a lot of long positions opening here when you look at the liquidity. But ultimately, if price really does squeeze up here, I think inducing a lot more longs, get a big squeeze on here, and then we could still drop. So the next thing that I want to look at here is the 4 hour. Let's have a look. What's that? Just a quick look at the chat. Zach, hello, mate. Awesome. Very, very welcome. Jesus. Dang, you don't. Well, ping me over some details, mate, and I'd be more than happy to share some stuff out for you. If obviously we need to check bits and pieces as well, but if bringing some exposure to that can help, then please do let me know. And Simon, hi mate, what's your favorite hours to trade as an intraday trader? So I look for the hours of the day where there's historically the highest trading volume and volatility based on traditional markets. So if anybody studied anything of Michael's ICTs, then he uses these things called kill zones. I use kind of like a hybrid of those really, where I'm looking to kind of align myself with the New York session. So New York AM pre-market, New York market open, and I typically run it through for about 3.5 to 4 hours. After that, I find that you get to around about lunchtime in New York, things tend to kind of calm down a little bit. The PM session then takes on a very different dynamic there, because you've got the close of the European markets as well. And then I don't typically trade Asia. So what I like to try and do is kind of condense it into sort of like a 4 hour trading day in the afternoon, which my time runs from about 1:30 until sort of about 5 p.m. normally. And then if there's, the signs for the PM session, which then would pick up around about normally I would pick up about 6:30, 7 p.m. my time here in London, and then kind of trade through into the evening. If I'm trading Forex, indices, bits and pieces like that, then I will consider trading the London sessions as well. Obviously, Asia's a little bit late for me. What have we got here? Someone, do you ever use midlines within the gaps? Yeah, gaps and order blocks, right? So, you're looking for that equilibrium. So just waiting to see if you get that. Now, with something like that, just to pop back to the daily quickly, then ultimately you want to just make sure that you're respecting the time frame, right? So that's why I have like this set here. You can see it's got the little EQ. It's just a simple Fibonacci with a 1, a 0, and a 0.5. And what you want to see really is, you start closing above these and you're kind of then getting into this territory where it could be showing a bit more strength. I wouldn't ultimately, utilizing this time frame, I would still need to wait for a close above this, for a violation of it, so that I've then got encouragement that this has kind of failed, and then look for it to flip to support. But yeah, there's absolutely a way you can do it. And order blocks, it works well too. Really, you want to see the conviction stepping in from the sellers or the buyers, whichever way you're looking at it. And sometimes looking at the EQ of those levels can be a good way to do that. So back to the 4-hour chart. What are we looking at here? Let me just turn the session breaks off for a second. So at the moment, going into last night, obviously, I rarely expect, crazy price action over the weekend. Again, I like to see the markets aligned with traditional markets. However, as I wrote on Friday, expectation was we had a very, very big down week, right? To see that weekend kind of pump. And then ultimately, what we're running into overhead is, well, see if I've got this on here, actually. No, maybe on the other chart. But basically it's this, right? You got a daily gap, bearish gap. You've got a 4-hour bearish gap sat over the top of it. If you're new to using this, or if this is the kind of thing that you want to learn and study, then in the early days makes sense to do this, to move it onto these colors, because then, when you drop down to say a time frame that you're looking for something on, you're saying to yourself, okay, the time to be long at places like down here or here, right? Trading up into these, right? For me, I don't really like kind of being long within them, because they're just key areas of rejection. Get back above them and then happy days, right? Really, really happy with that. But in the same vein, as we look back over here, when we really started to break down, yes, you're going to get these pumps, but ultimately, if you're with the trend, you're going to get the right side of the biggest ones. And as long as you're kind of holding on to them with conviction, you can have a relatively low win rate and still accumulate a lot of R. So back to the 4-hour quickly. What does this all mean? Well, I think I would be comfortable to start getting into some intraday long positions if we had a 4-hour close over this. Yeah, it's a really, really gap. If we closed above it, I would turn it to purple, showing that it had been an inversion, in which case then my expectation would be for price to move higher. All right, look for the structure breaks here, target your key liquidity that you've got resting above these highs. But I'd still be playing it very cautiously, very aware that this red box is still a bearish gap. Yeah, and on a daily scale, we could absolutely pump, do something like this. Absolutely rip. Obviously not that wonky. And then the whole thing retraces back into, and you just have this long upside wick. All right, so I'd definitely be cautious of that on a daily scale, but it doesn't mean that if we're showing strength intraday, we could do that. If we're looking at this in the terms of looking at the equilibrium for this, the EQ, we can see, again, as our friend someone down here said, using that as kind of like a little bit of a line in the sand to say, okay, we closed above it here, and then look what happened. Price tried to make its way down, and we got to this bullish gap, right? So that was a really, really good sign. So then what we can say is, okay, is that a sign of strength here? And if it is, what do we want to see? Well, quite simply, we want to see these bullish gaps respected. Close below this here, and I would have had a lot of conviction that we were coming down for these equal lows down here, and ultimately back down to the swing low sat over there. So plan is really, really super simple. I released it in the Bitcoin report last night for members over at the Nest. And by the way, guys, if you're interested in any of that, you can take a look down in the description. We've got a great trading community over there, full of very, very knowledgeable professional full-time traders, whether it be fundamental analysis, intraday trading, bits and pieces like that. And QBS, our dear friend, I think, has put this together for me as well. We've got our trade club, right? We kind of focus. We do this a lot on NASDAQ as well. We have kind of flipped that towards crypto a lot more recently. Obviously very, very crypto heavy community. We've been running this since March, just seeing if we can try and do 100 R in a year. At the moment, we're 52.8. And you can just come along and join those sessions, right? We trade live together Tuesday to Thursday every week. Won't be doing Thursday this week, so I'll be flying to Singapore for Token 2049. But I think there's loads of promos and offers that we've got going on at the moment. So do come along and join in if you would like to. Like I say, you can find that all down in the description. So back to the charts, and the plan is super simple. We're holding a bullish gap in here, right? Let me just get rid of this for a moment. Now, we are delivering as well from a big bearish gap here, but we've had a structure recovery here. So once we took out this high, and we did so with a little bit of momentum, long upside wick here wasn't overly encouraging. So really, really simply, we come back below this, we're short into these lows here, which are about 53.635. And then, definitely holding runners down here to 52.556. This is looking at it from an intraday or short-term swing perspective. Close above here, and I think we come up for some of this liquidity resting here. So what else do we want to kind of take a look at that plays into that bias and lets us know, what am I looking for? Well, what's the market's appetite for risk? We're going to take a look at the news very shortly. But I'm always looking at equity markets. I love trading indices, right? Your NASDAQ, your S&P 500. And for me, they provide a really good example of the market's appetite for risk. Technology stocks are considered risky stocks. Government bonds, the dollar, for example, are considered your safe haven. So what we can do is we can look at something like the DXY and really kind of seeing the strength here in the dollar index. And the dollar, this is just the dollar weighted against basket of other currencies that's heaviest weighted towards the euro. And what this tells us, and again, this is just broken down. I break this down into ranges, okay? And, not the time to be short at these. This is the time that if you see that conviction again, get underneath, price comes back, up we go. Like this one, big sell-off here. Ultimately, when we had this pullback towards this gap, looking to go short, price stopped a little bit short of it here, but ultimately, after taking out those lows, again, we've climbed back into the range here. Why would we be climbing back in here? If the sell pressure here was strong enough, then the target would be this. Yeah, so looking to be long here. So I'm very, very interested in what happens when we get to 101.821, which is the midline of this range that's provided a really key pivot point. But at the moment, the dollar index looks really strong. So what does it tell me? Well, it tells me to be a little bit cautious, right? Now, crypto doesn't follow this in a completely tight correlation, right? I use it a lot more with indices when I'm trading things like the NASDAQ, for example. But it can provide a kind of really good heads up. What we've got at the moment is we've got quite a news-driven market. We've seen that in the last few weeks. We've got a situation economically, if we look to the US, for example, other countries as well, Europe, where, inflation is coming down. Interest rate cuts are on the horizon. For the US, for example, there's a big question around whether it's going to be 25 or 50 basis points. The worry about the 50 basis points cut is that it, could indicate that a recession is incoming. Normally, it's at least 6 months or more before that data washes through and you see the effect of it. However, I think the last statistics were saying that, it's a 25 basis point cut. Odds are shortening now. So, when we're in situations like that, then things that we had last week, where we had FOMC Speaker Waller take the keynote, it's the hawkish and dovish tones that come out of them that really kind of make the market react. And by that, hawkish just basically means bearish and dovish means bullish. So you're looking for their commitment towards rate cuts and what they're talking about the data. And typically their comments will be very benign unless they want to utilize that or weaponize it, for want of a better term, in order to kind of, communicate things to the market, because they don't want to see things running too hot too quickly again, because then inflation becomes an issue again. And once more, everything becomes out of balance. So long story short, strong dollar often equates to weak for risk assets, and Bitcoin and crypto is the ultimate risk asset, right? The other thing we can look at are like the US 2s and 10s, okay, but I won't go too deep into that now. But again, the kind of thing that you're seeing strength in these, showing that again, it's not necessarily painting the best picture for risk. But as we can see today, the equity markets have opened up pretty strong as well. However, like with this, for example, then, we're just pretty much still in here delivering from this bearish gap. Once again, we'd want to see price come and close above this and really have a run. That would be a good indication that Bitcoin could be looking to do something of a similar nature. So what else do we want to cover today? Well, actually, I do want to take a look at ETH. Let's take a look. Hang on. Take a look at what we've got here. I'll take a quick sip of tea. Perfect. Actually, saying that, before we go on to there, let's make sure that we're taking a look at our Bitcoin range as well, right? So the key levels that we're looking at. Obviously, we've got this, we've got our channel, which is nice. Let's create that as a group, just randomly call that X. So, support and resistance, key levels that I am looking at the moment. Obviously, as we covered last time, this is the previous all-time high from November 2021. That for me is holding as a range high. This is a range, so this is our midline. As we look here, we can see again the interplay when you look closely between price rejecting, accepting, in and around the EQ, but ultimately the deviations here are for buying when you climb back in the range. But then again, look, you get back in the range, you fail the midline, climb back outside, price then tries to get back in here, sees this rejection, ultimately we sell off. Our original targets for that before with this low sat in here, followed by this one, and then this actually on the lower time frames, when we look at this on the 4 hour, has provided really good confluence for that kind of extended support and resistance flip, right? So price comes down into here, gets back above, holds, closes underneath. Once you get back again, remember, this is a little offside move. Price then shows strength by getting the range here. Ultimately, we sell up. Rejection here, rejection, back for this support, and then we close above, establish ourselves back in the main range and move up. So we're looking for something similar to that over here, right? If we're going to get bullish here, we know the play. We want to violate this gap, first of all, invert it. Then we want to reclaim this level. Just start looking at these smaller wins, right? Look at the consistency. I mean, we've got all these untapped highs up here as well, which provide great liquidity targets, but we do need the market to obviously play its part as well. So if you I always love how SZ does this, right? You really see him often with the charts really kind of scrunched up like this. And then you really get to see these, these key kind of support and resistance flips, yeah? So while it might not look like much here, what you see here is price trapped under here. Then it gets above consolidation and then absolutely rips, right? Same as this here, gets above, consolidates, rips, get back underneath, retest, sell off. Now, we didn't get all the way down to the midline here, but what this tells you is then when you get back above here, come on, there's got to be strength there. If you're not running to these key liquidity targets and levels, price is going up. Well, this is the manipulation, right? This is the deviation, and then you're back above. And the same applies the other way when you come back in. So let's take a look at ETH, shall we? Let's take a look at the Binance contract as well. Always nice to see some of the squiggles paying off, isn't it? We obviously haven't used this chart for a little while. Back here, this was the key thing, right? We were looking in here for price to obviously now we've got above the midline here. The question, is this a deviation? Is this continuation? Quite simply, we had this lovely bullish gap below that, can tell us everything that we need to know there. Hold it, continue to go long, close as we did here, retest this smaller bearish gap in here, price ultimately sell off. This was a really good one as well because we had the sell off, price rejected here at the midline as well, and just kind of crept up into this upper gap, sold off, rejection again, sold off again, rejection, back underneath here. I have to say I was very surprised to not see it take this level. It's one of those things that, these levels are never perfect. They're much more kind of like boxes really than they are levels, but it's just quite a nice, clean way to sit here and kind of look at these and say, okay, these are the key areas that I want to action. I want to be a buyer here, right? I want to be a seller here until I'm proven otherwise. So same here, seller here, right? Buyer down here. Now, we didn't quite tag into that, but, we're in that kind of vicinity. And now we face the same situation really as Bitcoin, where we're just holding this bearish gap. And actually, if we use, the same principles here, putting the equilibrium across, we can see that we haven't had that close above here. Actually, we're getting quite strong rejections at this midline, which isn't overly surprising. If Bitcoin's just getting hammered, then it's going to be very, very difficult for, alts, ETH, etc. All right. And Gregory, yeah, absolutely. Why not? Let's finish up on FET. Yeah. Let's take a look what's going on with this one. So again, you can see back from TA we were doing here back in August, right? That this range, and this for me is kind of just this whole thing stayed in the upper portion of this range here, which we kind of split with the midline. And this move then happened here, right? So like I was talking about earlier, you wait for that high and then you wait for price to establish itself above it. That squiggle overlaid on here is exactly what happened. That was the breakout high. Price found support from this bullish gap here. Then we got back above. Fine. Why would we be getting back above here if we weren't looking to rip? And I tell you right now, I wish we'd held that for a little bit longer, yeah. But the woes of being an intraday trader. So what have we got here at the moment? Well, let's zoom out. We go to our weekly here for a minute. This will obviously look a little bit ridiculous here, but actually I can just save that as a group. Nice clean chart. So on a weekly scale, what I quite like about FET here is that we're still delivering from this bullish gap, right? Nice big bullish gap. Price came up, set the gap, seen that reaction here. We now want to see price continue up from here. You don't really want to see price back in this gap again. Once more, it will be seen as a little bit of weakness here. Now, the other thing here as well, like I was talking to you about earlier, how these early stage moves are often, we see these gap violations. So look what happens on the way down here, just to give you one other example. Bearish gap here. So we treat price action as bearish unless we violate it and close above. And ultimately, we test it here, and it gave us a really good bias. We're then looking at this to do the same, yeah? And so that was a bearish gap here. Then what happened? Price closes above it here, violating it. So then when that happens, I'm just looking for the next logical upside target, right? So for me is this. And then this gap high here. All right, high within a gap, really nice liquidity pool. The sellers were really, really strong in here before, then should give us an indication when we get there if they're still there. Now, obviously, we could revisit this tomorrow. That is unlikely, right? But we could also revisit this, months and months down the line. But it's key to have that kind of understanding. So just to kind of clear this up a bit, the upside target here, 1.556. However, we have since set another swing high here on the close of last week's candle, and this one is set at 1.477. As long as we hold this on a weekly scale, then we're looking higher. So what else and how can we play that in? Well, one thing I really like about price here is the reaction after sweeping this low. Again, we've got a gap low here. Price has taken this out and now looking to kind of forge that recovery. I think what would give me extra conviction here is if we closed above this, confirming this as an order block. And I like this as an order block because we're reacting at a higher time frame level. And I would think as well, just trying to zoom out a little bit here, look at this consolidation over here. Why am I so interested in that? Well, quite simply, this consolidation here led to this massive rip here. So, a lot of buyers are seeing this here, and we established ourselves above this level here. And then, as we saw what we were looking at before, we just wanted to see this established, and then really, really felt, back here early this year that this thing could have a real run, and it did. So looking at that, if we then move that across this area here, what did we get? Well, you could almost look at this as, an area of kind of support and resistance, and kind of focus more on the bodies here than anything else. And let's just do that in a random color, shall we? Let's do that in teal. Why not? So this consolidation here, look, what did this play? The order block that was in here, this big pump, reaction, but diminishing reactions. Then we got closed underneath it here, and ultimately price then sold down, seeking liquidity lower. Now we're back above this, right? Look, strong move through it, really ripped above, reacting from a daily gap. What we want to see now is this area hold and provide the platform for price to move higher. On a daily basis, I'm also looking, if we're looking for continuation here, to this higher, which is at 1.267. But like I say, we really want to see price close above here, because they would confirm this is an order block at a key level, meaning that really we would then be looking to find those runners and those long positions in, first of all, to 1.267, then 1.477, and ultimately the higher time frame target, which is 1.556. Looking at this on the 4 hour, you're very welcome as well. Oh, Gregory, sorry, mate, just saw your message there. On the 4 hour, what do we want to see? Well, quite simply, I'm just looking across the line here. I really do like this. I'm just going to get rid of this teal box now. We know we're kind of holding that. Our daily gap is lower. We don't want it to look like some bloody art attack painting, do we? So this inversion here is really nice. Yeah, so look, bearish gap, rejection, close above, price chases down this high. So we're at that first liquidity target now. We've got 13 minutes until the close of this 4-hour candle, and quite simply, if we continue to hold this gap or above it, then I am bullish on this instrument, quite simply. And for a 4-hour, like an intraday position, then that at 1.186. So we would want to see, or I would want to see something like this. Ideally, price kind of sets that gap, comes down into that. We get our recovery here, trade it up into here. We get that recovery here as well. And then we look to move it here, and basically just taking this level to level as we play it higher. I'm not convinced at the moment by the overall macro picture at all that there's enough strength in this market. We do need to be very, very cautious of Bitcoin. Obviously, that will really dictate, the majority, if not all, of the other currency pairs. If I'm looking at this on a more granular level, and I really like using the kind of 15-minute here, we've got about 50 minutes now until the kind of pre-market for traditional markets that I'd be looking at. There's a couple of things here. Really like this low, right? For me, I always want to see people caught offside before I enter a position, meaning that people will be getting bearish here. And, you can absolutely understand why. Bearish gap. But remember what the higher time frames are telling us. The higher time frames are telling us the opposite. So if my higher time frame is telling me to be bullish, I want the lower time frames to be bearish, because I want to find price drawing people offside, getting me into a position where I've got a good opportunity to kind of take that bid on the other side and then look for that recovery. So there's a couple of places here we can look to react. Would be here, hold that, and then move up. All right. Or, for being very risk averse, coming above here and then flipping this, immediately kind of targeting this high, but ultimately not losing, not getting too caught up here on the lower time frames, and looking for us to move to that 1.186 level above. If we did just show strength here, if this just holds and price kind of rips above here, then we can see that we've got a structure recovery, because we've got the higher low, lower high. So again, this is just the lower high, right? We need to break this low to have any kind of shift, but we can move that here, set the higher low. I think this gives us a good platform from a market structure perspective to move into as well. Thank you, Craigie boy. Always a pleasure, mate. Look, let's finish up on the news. And I just want to cover off what we've got coming up this week, just so that you guys are aware. I think it's always very, very important, even if you're completely and utterly just crypto focused. It's so important to have this context, right? So let's have a look. Big news week last week, right? If you want to go through the charts, you want to be looking at this last week and look at the impact that these prints had, right? And I'm talking mainly when we came in here and we had the ADP non-farm employment change. They predicted 144,000, would have been bullish if it was over that, came in at 99. Not really ideal in truth, normally kind of correlated with the dollar, however. So depends how you interpret that data. They're very rarely standalone data pieces, but that kind of shock of the big miss gave us that kind of real drop to initiate it. And then the unemployment claims came in slightly lower than predicted, not massively, but showed that less people than predicted were unemployed. And then all of a sudden, we had a flat services PMI come in as well. So, a little bit mute, but these little moments can just form these big catalysts. And that's what we saw really go in to the market. And then, when we missed the non-farm employment change here on Friday, I was already well out of the markets at that point anyway, because, unlikely it wasn't going to reflect something similar. And then, unemployment rate came in fixed, and then all eyes moved to FOMC member Waller, who was speaking, and then that's how we then interpret that data as well. So this week we can see that we've got a very benign start to the week. Monday, Tuesday we roll in, we've got nothing unless you're forex trading, in which case then you've got British and Canadian markets to be looking at. Wednesday is when it really kicks in for me, and in a big way. Core CPI month on month, CPI month on month, and CPI year on year consumer price index, right? Now, it's, the whole point around this at the moment is very, very inflation driven market. Yeah. So you want to see, how much disposable income do people have in their pockets, right? Because the more disposable income they have, the more likely they are to invest, right? And the more likely are they to be risky with their investments as well. We then move into Thursday, right? And we can see down here as well. Now we've got PPI month on month, core PPI month on month, unemployment claims as well. Obviously, watch out for the ECB press conference if you are looking at the euro as well. Typically, don't have as far-reaching impact on the markets as the US does when we're looking at risk baskets, with your indices, crypto, etc. But definitely something to be aware of. All right. And actually, do you know what? Just to finish up, I really don't kind of use or utilize this as much as I should, which is terrible because it's a company that's very, very close to my heart that I've been, a part of for I think over 3 years now. Company, the Bird Nest, who couldn't speak highly enough of. Heading out with them to Token 2049, which is going to be really cool via Dubai. So I don't know if any of you people, if you are going to be out there, but if you are, do let us know. I've got tons of networking events on. You're going to be doing some speaking, some workshops and that over there with the one and only Crypto Burb. So let me share this with you quickly, because this is our website, right? And just to make it easier for you all, we've kind of moved a lot of things onto our website recently. Yes, you can find out about all the memberships and bits and pieces. Again, you can, join us completely for free just by using the ref link, and then you get access to all of our calls. However, what I want to draw your attention to here are our breadth charts, the crypto screener. We have our own economic as well, so you can see everything that I was just going through there. Again, anybody that knows me on here will know what a dinosaur I am. So that person, a creature of habit, really should be using this more rather than the Forex Factory one. But just helps keep you updated. But we got the stock heat maps as well. You can look across the industries, right? You're looking at, okay, what are the tech stocks doing as well? We've got this on the S&P 500 at the moment. Doesn't look great, does it? In fact, looks, if anything, a little bit heavy. So you can use that. You'll see, find out what the others are doing. We've got the crypto heat map on here for you now as well. You can see that actually, while the stock market is typically, and while equities appear to be cooling off, especially in the technology and the risk front, then boom, we can see that that's coming in. We can see that, okay, actually things are filtering in. We've got a little bit of a resurgence here in the cryptocurrency, right? And maybe people are happy to be a little bit more speculative at the beginning of the week. The crypto screener is something that I really do like, okay, because it's telling us based on a lot of different calculations, way beyond my level of expertise, but a lot to do with oscillators and our in-house indicator, which is the Vervicator Pro or the B Pro. That look, we're bearish on a weekly scale, bearish on a daily scale, bearish on a 4-hour. We just want to be cautious entering long positions. You get the weekly performance and also the change, current price, volume in 24 hours, and obviously the level of the VWAP. Now, what I use this for, actually, if I'm looking for positions, is let's take a look at Doge, yeah? Or, hang on, not that, is it? It's not Doge. Where was the other one we were looking at here? This one, Floki, our brilliant friends and partners over at Floki and Token. We'll be meeting up with them over in Singapore, which I'm really looking forward to. But looking at this here, right, look, bearish, bullish. What does that tell me? Weekly, daily, 4-hour. Remember what I said, right? And I'll never forget the words. It's just monster pit trader back in the day, on the trading floor, just screaming at the top of his lungs. Forgive my language this time of the day, but you effing pussies. Why are you selling when there's blood in the water? You buy when there's blood, you buy when there's blood. The same way that you sell when there's euphoria, you sell when there's euphoria. So what does that mean? Well, look, there's blood in the water. So when you've got an asset like this, for example, like Audi, you're bearish across all those time frames, the chances are you're in this cascade down. It makes it very difficult to enter and you have really, really rough risk to reward. However, something like Floki here, and I don't, want to be short Floki. I'm actually a big holder of Floki. I don't mind lower prices on Floki because I just absolutely stack up on it. However, look, we've got this, yeah? So bearish, bullish. So what does this mean? Well, this means this could be the pullback, yeah, that allows us to position ourselves for lower prices. And if it doesn't, and then we see that turn on the daily scale, all of a sudden, it shows us that we're starting to convert higher time frame strength. So that's how I'm utilizing that. And then the last one here are the breadth charts as well. And this is a really, really cool feature, okay? Just telling us percentage of cryptocurrencies above their 200-day simple moving average, above the 50-day simple moving average, and the 20-day, all right? Now, what we can see here really does paint the picture. Look back over here, yeah? So in May, coming through to here, you had your 35.40, right? Now, as we look at it here, you're down at like 5%, yeah, or actually 3.72, which is really, really low. Now, we've seen a little bit of a creep up here over the 50-day. Obviously, because it's the second shortest one that's on here, sorry, it aligns with the creep up that we've had here. And then what you're looking for here for ultimate strength is you see when these are all aligned, yeah, so really kind of between mid-May and early June here, and here is when we were in those real pumps. You can tend to see the correlation between these spikes as well. What you really want to see from a standpoint of being bullish on crypto is to see, the 20 recovered quickly. So price going up to here, you're getting into the higher percentiles. Then obviously the 50 to follow that, and the 200 obviously being the longest period will be the last to flip. So do go and check that out. We've got infographics, loads of bits and pieces. You can get the free newsletter, infographics, which are really, really cool. Help you learn about divergences, for example, hidden and regular, as well as just a load of other really, really cool information that we've made over the years that we've picked up from our professional trading team, as well as others, not forgetting, obviously, Crypto Burp himself as well, who is a chartered market technician level 3, CMT accredited, as well as some of our other trading team who hold that qualification as well. So I hope it's been a good show today, guys. I did mean to keep it shorter, but I seem to not be able to not rattle on for an hour, but I hope it has been useful for you. Please do come along, make the most of the free resources we have. Do reach out to us if you've got any questions. You can find all kinds of offers and bits and pieces in the description if you are interested. And if any of you are heading out to Token 2049, do let us know. We'll let you know where we are and hopefully get to meet up with as many of you as possible. Okay. So look, wishing you a fantastic week ahead. Stay safe, stay vigilant, keep an eye on the news as well. And remember, look, times like this aren't the time to just be, to be aping into stuff, while the market's chilling out. Kick back, put your effort into education, find that niche, run deep on it, gobble up all the information you can, work with good communities, work with good people, ultimately be good to other people, try and make your life as good as it can possibly be and help others along the way. All right, legends. So I'll be back on Wednesday, 1100 UTC like normal. For you TBN legends, I'll see you over at the Nest this afternoon. And for the rest of you, I look forward to seeing you on Wednesday.